What's up, everybody? This is Jimmy with Trading Decoded. It is 3:27 in the afternoon, and it's November 21st, 2024. And today, holy smokes, we absolutely crushed it. And when I say crushed it, I mean right now, as of right this second. By the way, yesterday, as a community, we crushed it as well. Yesterday, we had 27 reds and 163 greens. Today, right now, we have 17 red books and 164 greens. I do want to point out that those number of reds is increasing as people continue to try and trade the chart, which is happening for the last 2 hours of garbage. We're moving more sideways than up or down, and I will watch these reds continue to move up. I don't know if you guys can't probably see that throughout the rest of the day. So just a heads up, before 12 o'clock, there was fewer reds and a very similar amount of greens. It was a beautiful, beautiful morning. But more importantly, I do want to point out why and how quickly we made our shift from wanting to buy calls this morning into why we were at least going to skip on the aggressive side of calls and what we needed to see to take puts. And that's the most important part about today's video, because it happened on the fly in real time while we were doing our call put scenario. As you guys know, I draw all my lines at 8:30 in the morning. This is where our three blue lines come from. Now, admittedly, we had been trending up all of pre-market. I was all prepared for calls. All prepared for calls. Top 10 was green. Everything looked good. We recovered nicely from a little bit of a dip that happened into the close yesterday. We started it this morning and then spent all morning going up. And so I was really interested in calls today. As we were talking about our call put scenario, again, we do this at 9:25. I said, all right, well, I'm looking left. I'm wanting to get a close above 593.65. And I'm looking for that to take us up to 594.15. Okay. Now, of course, we want the Qs to not be stuck at resistance. Okay. Which we wanted the Qs to be above 506.68 as well. So there was two caveats to the call line. I feel like if the Qs on the opening candle would have closed above that and SPY would have closed above this, we should have made the move up to the yellow. But here's the thing. Qs didn't do that and SPY didn't do that. This is reminiscent very much a lot like how yesterday started. However, yesterday was different because I was expecting to play puts when the market opened, whereas today I was hoping to play calls. And I'm going to show you the one thing as we were talking about and explaining what we wanted to see in order to get into calls and what we wanted to see in order to get into puts. One thing changed that changed it all completely, and I'm going to show it to you in just a second. More importantly, to prove that I was more interested in calls than puts, you guys, well, if you watch my videos, you probably don't know this about me yet. If I'm leaning towards one side more so than the other, as far as calls or puts, I will make my reason for entry for puts or calls much closer to where current price is, other than farther away. So what I mean by that is here at 925, we're all the way up near the top of SPY's pre-market range. Okay. So I'm saying, hey, we're trending up. We're putting in higher lows. If we cross this line again, I'm expecting it to continue up to the next line. Look how close our call line. Now I did put that line there right before 925 as we were doing this. This candle was printing. So it did breach it after the line got there, but suddenly it came back down, which is okay. And I said, if we were to take puts, I need SPY to prove to me that it's really worth considering by putting our put line much lower. We have support here. We had support here, here, and this yellow line here, all of which I wanted SPY to get through, prove to me that it's worthy of putting my money into, at that moment, what seemed to be like a counter trend trade. Okay. Now, what changed the whole process that we were looking at? Can you see it? Now, the people who are in the room with me, they know exactly what I'm about to say. As we were talking about this, we recognized that the Qs had a resistance here. We pulled back. We came up. what didn't we do on this particular candle? I know it's subtle. I know it's subtle. And if you watch my videos and you're not in this room, you're going to think that what I'm about to tell you is BS. I promise you it's not. Just go ask the people in the community. As this candle stopped short, the very next candle that printed, proving to me that this was a lower high, I said, whoa, whoa, whoa. Things just changed for me as far as wanting to play calls. I said, that's a lower high on Qs. That's typically not a good thing for calls. I'm going to wait and see what happens here. Okay? Still wasn't saying that I'm definitely getting into puts, but this changed my entire plan of getting into calls at the open. Lower highs, bad for calls. Okay? More importantly, I said, guys, if I'm looking for puts, now I'm not going to be prepared. I'm preparing for puts, right? This changed the whole thing for me. Originally, I was ready for calls. Then I said, you know what? I'm going to prepare for puts. And if SPY at open, rocket ships up, I'm going to miss the trade because I wasn't going to be ready for calls. I was ready for puts. However, patience struck me, which it never does. I said, I'm going to wait. Not only, and here was the more important part, because I said I'm going to pay less attention to SPY, more attention to Qs. I said if the Qs get through pre-market mid, this line right here, I'm going. I don't care where SPY is at that time. Fortunately, it lined up with us breaching the put line, same time. But that was the entry. Now, why a down arrow here? Because I have, and usually I'm this guy, and quite frankly, my options ladder pricing didn't update fast enough for me to aggressively get in right at the open anyway. So would have been a good thing, because if you remember yesterday's video, guys, I got in aggressively and then we chopped around before we fell. This candle right here would have been a freak out candle for me, even though SPY still stayed below its resistance. We never crossed the call line. So even if you were still interested in calls, we never crossed the line that we wanted to see. However, the two criteria I wanted to see to jump into puts, because people were asking me, Jimmy, what if Qs closes above support or resistance? Would you get into calls? I said, no, we still got a clear resistance on SPY, right? Again, guys, confluence. We're looking for confluence. Okay, great. We broke it on Qs. We need to break it on SPY too, especially if you're going to take an aggressive trade. So yes, the Qs did ultimately close above that resistance, but we hadn't moved through resistance on SPY. So again, I was okay here waiting. We get a nice red candle. Now my puts are looking better. Is that during the printing of this candle, somebody asked me, Jimmy, when are you looking for puts? I said, if Qs cross this pre-market midline on their chart, I'm going in on puts. Okay? I'm hoping to make it down to at least this support right here. As you could see, we blew right through it. We got straight down to the next support. Pink line, closed below it barely, straight down to the next support. Opened on the other side of it, straight down to the next support and the next support. It just kept going, right? As we cross each of these lines, starting up here, I started to put in a trailing stop, okay? So when we cross this one, I'd readjust my stop loss so that if it holds this support, it stops me out. If it continues down, I readjust it again. At this point, I was so green that I was feeling greedy by not getting out like I normally would. I think part of me getting out early yesterday played a role in me wanting to teach the market a lesson in staying in. SPY kept dropping, closing below support. Now, the reason this one's here is because Qs at this time was hitting a support level along with SPY, which was right here, okay? Below that, your next one down is the pink line. So if we clear this, we're looking for the pink line. We get that there. Could have stopped yourself out there if you're interested. Or if we close below this line, we're hoping to get down to the next support. Ended up getting stopped out of this trade here on the 938 candle. But when you start seeing all these wicks on the bottoms, guys, that's telling you that there's some buyers here trying to stop this from going down more. Okay, we don't know if they're going to win or not, but at this point, I ended up getting stopped out for 164.6% return. This was a massive, massive win. Not just for me, but a whole bunch of our community members jumped into that trade with me. It was picture perfect. Qs broke support, SPY broke support, ADD started to fall off a cliff, and NVIDIA, which is another thing we watch often, and I don't have it on these three charts here. I could show you on my multi-chart. But NVIDIA at first was struggling to move down, but boy, when it started to move down, it started to move down aggressively. Right here, look at this. It hit a resistance similar to the Qs chart and then just fell off a cliff. Everything about that trade felt so good to stay in because everything that we care about finally lined up with each other. But what started it all, and again, I know it seems subtle, and if you're in there, you know exactly what I'm saying because it changed like that. Right here. This little guy right here. Did I expect us to free fall like this? Absolutely not. Anytime we see a lower high, no matter what is going on, I remind people all the time. I instantly say, guys, what did we just put in? Lower high. What does that mean? Bad for calls. Off the table. Doesn't mean you have to play puts. We still waited for a reason to take puts in a relatively green day. Okay? But that candle right there is what stopped us from getting into calls on a day that felt like calls were the right play. This is not a bias this time. Okay? This was as simple as this lower high right here. And that's all that it did. And that produced what ended up being a massively winning trade for myself and for other people today, a bunch of other people. Today was an amazing day. And to have back-to-back huge winning days in our community is such a good feeling. It's such a good feeling, both of which happen to be to the downside. But why is there nothing as far as calls on this pullback here? Mainly because I was answering people's questions who didn't get into the trade. A lot of people, when they miss a move like this, start asking, hey, where's a good time to get back into puts? When I'm answering questions and trying to explain things, I can't really pay attention to the charts enough to have clear dialect during that time, right? So we never pulled back to a resistance that would have made me feeling good to get into puts at this point here. And even if you did, I'd still be aiming for the same support. Why? Because that's where we stopped moving down before. So if you buy a pullback, you got to assume that the support you just pulled back from might be the end of the move. In this case, it was exactly that. If you're looking for calls, well, make sure you close above resistance. And you guys know the rule. Where are we expecting to go if we close above resistance? Well, your next resistance up. Now, there's really no resistance that was created, so you almost have to use lines on the chart. There was no attempt to move up during this move down. So it would have been hard to judge where you should aim for this to go, unless it's one of our lines here, but that's up to you. And again, we were at 951, pulled back to a resistance on SPY. What were we doing on Qs? We were near a resistance line on the Qs. So if ADD was trending down at 951, that would have been a consideration. Yeah, see, I probably wouldn't have bought those puts because ADD was on a decent move to the upside. So again, for Confluence, guys, yes, we had a nice drop down. Yes, we had a pretty aggressive move back up. Yes, we hit resistances on both charts, but imagine what ADD looked like at the time to us, which was this. This does not make me feel warm and fuzzy about the market rejecting just because we're at a line of resistance on both charts to the downside. Small caps can put quite the kink in your plan. Now, admittedly, those resistances did hold, and we did come right back down to the same supports that we got down to before. Qs ended up breaking lower. SPY got a little lower, but it was pretty wild on the way up and down from here. Now, still, more people saying, Jimmy, I missed this trade. I missed that trade. When can I get in again? I said, well, let's wait for good setups. Again, this here, as crazy as it is to say, we never really put in a higher low. This was just a big pullback all the way down. But on the way down, we were putting in lower highs every once in a while, right? So we know lower highs are bad for calls. So you wouldn't have been looking for calls on the way down from here. Then we get a higher low. Higher low, if we break resistance, we aim for the next resistance, which was this line. If we get above that, we'd be aiming for this. We got close to it. We didn't quite make it there. On the pullback, we're either going to hold support and make a higher high, or we don't and we make a lower high. It's at this point where we say, guys, calls come off the table because lower high. Now let's wait for a break of support. Make sure there's room below that support. And what was great about this is we had a bunch of new people in here today. As we were talking about these scenarios before they happened, they got to see with their own eyes, guys, that it is possible to get a good idea of where you should consider taking trades. They don't work 100% of the time. I'm never going to tell you that. But to hear me say it minutes in advance and then you watch it happen, maybe not. When we get there, I'm trying to give you the opportunity to build some confidence in trusting the chart, okay? Lower highs just means we're taking calls off the table for now. Doesn't mean jump into puts. For some people, they look at that as a reason to jump into puts, and that's fine. If you're an aggressive trader, that's up to you, okay? I'm just telling you, take calls off the table when you see this happen. Now, my rule is lower highs, we're more likely to break support, not hold it. Well, our next support down below this right here is all the way down here. We get through that, expect it to go to the next support, which was here. If we get through that, expect it to go to the next support, which was here. Qs was doing the same exact thing at the same time. Qs broke support, went down to the next support. It broke that support, got through these guys, straight down to the next support. Every time we closed below support, we went down to the next one. And then on the way up, we move back. It's not put time yet. Why? Higher low. Okay, doesn't mean to jump into calls. We still have to get a little higher to get through a resistance level, which we didn't produce any here. It's all the way up here. Okay, another higher low. We get through resistance this time. Where are we expecting it to go? To the next resistance. It didn't go straight up, but it never pulled back to a point where if we closed above this, which was our next trade, I believe. Yeah. So guys, if Qs can get above this area over here, I believe this lines up with that, 1047. Is that this guy here? 1045. SPY did it first. We were looking at the SPY chart, but at 1047, the Qs did it. Okay. Now, if you took the SPY trade, you have a split candle here. Could be resistance, but I also think Qs were getting close to a resistance at that point. Or you ride it up to, we usually pay attention to the Qs. The next resistance, which was all the way up here. Okay, 1056. 1056. All right. Now, again, we go back to the Qs. 1123. Jimmy, what would you do next? I said, well, let's wait and see. Right now, we're in consolidation. So this could be an orange box situation where you move up, you consolidate, and usually the move out of consolidation will continue in the way that brought it there in the first place. Now, we didn't mark it as an orange box because it was a little bit wider of a range, but we did say, because one of my members who was getting ready to go to work was like, Jimmy, I need to take a trade. Where would you be looking to do something? And I said, well, I'm not calls or puts. We're in a channel. We got to break out of the channel. If we break high, just make sure that there's room to make it up to resistance, which in this case would have been here on SPY. So you want to close above this resistance and aim for the next one up. Okay, so that would have gotten you in here and got you out here. This was the Qs, and the same thing happened on SPY, right? Except SPY didn't break its resistance yet, but this whole trade was based on the Qs, right? The Qs. I trade the chart from the Qs, but I take my entries with my SPX contracts, just like the puts this morning. I was worried less about crossing the put line and more about making sure the Qs were breaking the line I wanted to see them break. And that's what triggered me to get into that trade. Okay. Same thing for a lot of these trades. We're watching the Qs. We're watching ADD. At this point, ADD started to move, make a little bit more of a move to the upside. Qs broke resistance. We get in. Qs make it to the next resistance. We get out. Okay. And at this point, I get ready for lunch. Nope, not yet. We kind of pull back. But at this point, so many members in our community were already leaving the room because they had already made all their money. One and done. It's a good thing. The fewer trades, the better, guys. Trust me. And if you hadn't taken a trade through any of this, your emotions are at a level 11. FOMO, annoyance, frustration, aggravation, all those things are at an 11 here if you didn't make any trades yet. I remind people of that all the time, myself included. If we never moved down here and it just shot up and I wasn't ready for calls because I was looking for puts because of the ADD or Qs, that move would have paid, it would have worked out, and I would have missed it. And if it kept going up, I probably would have had a blue book day. I can't get on board if I miss the trade that I want to take. If I'm not prepared, frustration builds, all those things, okay? With that said, we start cruising up. Now, right before I went to lunch, somebody said, Jimmy, would the call scenario still be in play if we get up to it? I said, I don't see why it shouldn't, right? As long as Qs aren't at resistance and ADD is not tanking. ADD flattened out significantly. As you guys can see, it's moving sideways pretty nasty. So ADD is less of a factor right now. And Qs are basically controlling SPY right now. Okay, so Qs are in their pre-market range. SPY chart's gonna look very much like the Qs chart. Just look at it. I mean, that's how you know who's controlling who at the moment. It's very, very similar, Qs chart and the SPY chart. But nonetheless, not enough movement. With theta being high right now, you're not making money in this. You're not making money in this, okay? The moves aren't happening fast enough. They're not moving enough. It's slow going. Theta's dropping or increasing. Volume is dropping. Volatility is dropping. This is how people lose money late in the day playing same-day expirations, okay? And if you're playing next-day expirations, the cost of your trade is going to be more. That might not be a problem for you. But if there is a move, small one, that would normally pay you a little bit of money on same-day expirations, you're not going to be making anything on the next day expirations. You're going to need a much bigger move. And that might make you feel like you should hold overnight. And as I would never hold overnight at this point, because especially with everything that's going on geopolitically, earnings-wise, reports that are coming out, the fact that the Fed might actually pause rate cuts, which is not going to make the market happy. That might be what the market was reacting to this morning. I'm aware we've regained all of what we gave up this morning back already, and then some, just like we did yesterday. But there's too many things floating around out there in the ether for me to be holding positions overnight. Now, if you're an investor, by all means, the time wins every time. Meaning time in the market, you win in the end, right? I don't have time, and I don't, want to park my money, especially for an overnight hold, for those reasons, okay? But long and short of it is, we ended up breaking above the call line, okay, for the first time right here. Where does it go? This would have been our morning call play. We would have gotten in here, gotten out here. Literally took 2.5 minutes, and that was a 50-cent move. I mean, that's 25 to 30% return on your money in 2.5 minutes, right? So use Confluence, guys. I'm not on the mic anymore right now. This is, again, I'm going to watch those red books keep increasing if people keep trying to trade this late with this lack of movement. Mark my words. I hate to see it. It happens all the time. More trades doesn't equal more money, but if you don't realize that what works in the morning and why, as far as theta, volume, and volatility, you don't realize that those things are diminishing the volume and volatility while theta is increasing, your value in your contracts starts to work against you, not for you, okay? In the morning, you can hold through this kind of stuff for a little while and not be punished for it. In the afternoon, especially after 12, 1, 2 o'clock in the afternoon, this sideways stuff just crushes any value you have in your trade. Trust me. Okay? I know a lot of you guys can't trade in the morning. I know a lot of you guys can't walk away from the computer, especially if you've had a red day today. You're going to sit there and try and trade your way back to green until you run out of buying power or you do too much damage that you just walk away with a lot less money than what you started with. Trust me, I get it. I've done it 1,000 times myself in my trading history, and I watch people do it all the time. There is undoubtedly somebody holding on to something right now, and they are hoping that this move breaks out of this chop and ends up making a much bigger aggressive move in their favor. But the sad part is, if that doesn't happen, they will hold this trade to zero. It's unfortunate, but it's a thing. The market is against you later in the day. You have your much better trading opportunities, in my opinion, in the morning. And more people in our group, especially the people who are in my room with me, are learning that this is the way, right? Again, remember what the goal is here, guys. We're trying to make day job money without spending all day making it. The dream. That's the dream. Literally the dream. You want to do less and make what you need, right? Well, let's catch some of these nice moves. And no, admittedly, I'm not getting 164% wins on a regular basis, not even close. Probably count on one hand the number of times that I've taken more than 100% return on a trade in the last 2.5 years, 3 years. This is not normal for me. But everything today worked out, and all the reasons to stay in the trade to make today's return possible were there. And then when I feel like I'm being greedy or things are, just get uncomfortable because of the time in the trade, that's when I start setting my actual mechanical stops. Every time we move through a line of support, I set a new stop. Why? Because if that support holds and it goes the other way and I don't mentally stop myself out where I'm supposed to, I will end up holding that trade, allowing it to turn red. I know that about me, so when I start to feel like I'm about to make a stupid decision, I protect myself from myself with a mechanical stop, and I put my trading platform away, and I let it take care of the rest. And I told everybody that during this trade. I said, guys, I'm fixing my stop loss price, and then I'm minimizing the app, right? If we cross another line of support, I'll pick it up again, readjust my stop loss price, and let it keep going, and it's going to vibrate and to let me know that I'm out if it stops me out. And that's exactly what happened here, okay? So with that said, we're going to wrap it up, man. I hope you guys got some useful information out of this video. If you did, please like, share, and subscribe. I'd love to get some growth on my channel, guys. I know YouTube's not helping me out. They're not putting me in front of new people. I appreciate all of you. It's the same people who watch my videos every day. Do you mind sharing my channel with other folks? I would really like to get in front of some new people. I'd really like to help as many people as I can, and I'm not getting that help or support from YouTube. If you enjoy the content or you think that this could be helpful for any trader that you know, please share my channel with them. You don't have to share the Discord with them. Just share the channel with them. I hope that some of the information that I teach you guys, whether you're in my Discord or not, or whether you trade the same way that I do, lower highs being bad for calls and higher lows being bad for puts is a rule that everybody can benefit from. Okay? And these are the things that are important to me. Honestly, I want to get to 100,000 subscribers so I can get a play button. That's been a goal of mine since before I started my first YouTube channel. But YouTube's not going to make that easy for me because I don't make clickbait titles and clickbait thumbnails, right? Ironically, the one time I did make a clickbait thumbnail and title, it was one of my best performing videos, but I hate to do that because I hate watching those myself. In fact, I've gotten to a point where I skip over videos that have that stuff on them because I'm so tired of it. But I digress. Anyway, I hope you all had a fantastic day. Thank you for watching. Thank you for your comments. And I hope you all had a fantastic day as well. Till tomorrow, I love you guys. See you.